What is going on, Moon Gang? In this video, I wanted to explain some of the key pieces of data that we have that show both AMC and GameStop can still be squeezed. On top of that, I will also be doing a quick technical breakdown of both of their charts so we know what price levels to watch when the market reopens. Just so you know, as I'm filming this, it is Sunday, March 28th, and as of now, AMC is at 1031 and GameStop is at 178. Alrighty. Let's hop right into it. Let's kick things off with AMC. So the piece of software on the screen right now is Ortex. Just got off in an amazing phone call with one of the co-founders to help me really explain where some of this data is coming from and to be able to better really have a conversation with all of you about like the utility of what's going on. And just so you know, the top left rectangle right here, the exchange reported short interest, this is always going to be old data. It's reported twice a month, and when we get it, it's already at least a full week past, so it's already outdated data the second we get it. So we have to figure out other proxy ways to basically get a really solid estimate of what the potential short interest is. Obviously, if you're involved with AMC and GameStop, you know that one of the biggest drivers to this conversation is what is the short interest. Because with a high short interest, if the price starts to go upward, that could potentially cause a short squeeze, aka make the hedge funds have quite a bit of pain. So one of the best proxies for that is to kind of see what's going on with right here, the percentage of the free float on loan. So right there, if you're new to this channel, this terminology, let me kind of explain some things. So outstanding shares are the total shares in the world for a single stock. So right now, AMC has about 450 million outstanding shares. Free float is a smaller subset of that is the amount of shares that people like you and I, the public, can trade. So AMC has an outstanding share of 450 million, and then 400 million of those shares are in the free float, i.e. stocks that you and I can trade. So the next part is on loan. And this is, I think, one of the most interesting parts of the conversation I just had with a co-founder of Ortex. So on loan, how do we possibly get that information? Well, you have to know about prime brokers. A prime broker, if this is the first time you're hearing about it, can best be explained as a big bank that hedge funds loan shares to and borrow shares from. So basically, one hedge fund is going to call up and be like, hey, we have 1 million shares of Apple. We don't plan on doing much with them, so we're going to loan them out. So they would still own them, but they're willing to loan them out in case anyone wants to short them. Another hedge fund will call up and be like, hey, we're looking to short some Apple. Do you have any that are on loan or willing to be loaned right now so we could borrow them? So basically, one hedge fund is loaning, the other one is borrowing. In the middle is a prime broker. Well, these prime brokers, as part of their business model, they can actually sell that data. It's very, very expensive data, and Ortex is one of these companies who pays for that data. So after talking with them, they have about an 85% coverage of all the main prime brokers. So basically right here on AMC, when we're seeing on loan as 118 million shares, that's a minimum. This 85%, obviously that can go higher. The ones they don't cover are kind of smaller prime brokers, so it won't be a huge one, but it's at least 118 million shares are on loan. If anything, it'll be a tiny bit higher, which is very good for us. So anyway, once you loan it, so one hedge fund is going to loan it to the prime broker, and then the prime broker, like another hedge fund, kind of comes and borrows it. Once you actually borrow it, that doesn't definitively mean that you're going to short it. It means that you have the opportunity to. And as you can see from this chart here, like with the short interest, they're highly, highly correlated. They're not going to be exactly the same. There is a little percentage error here and there, but it's going to be very, very close. So basically, checking out what the on loan number is will give you a very good idea of what the current short interest is. It'll never be perfect, but it'll be pretty darn close. And if anything, it's just underestimating it. So this is pretty interesting. Right now, the on loan is 118 million shares on AMC as of Thursday, March 25th. If we rewind to right when AMC was originally squeezed, the on loan was 83 million. Obviously, far, far less. And actually also at that time, that corresponded to an estimated short interest of 14%. Well, let's fast forward. The on loan is higher, which means that the short interest has to also be higher. We're up to 18% now. So really, for me to tie this together, before when AMC cleared $20, the numbers are now more in our favor. As in, if the price action starts to go up, there's a really good chance that the next squeeze, if it happens, will be even more volatile and go to a higher price level. These numbers are very, very good for us. And so right now, the estimated short interest of the free float is around 18.4. Once again, if anything, it's slightly underestimated. But what's better is that it's trending in our direction. 7 days ago, the AMC estimated short interest was 8%, as in 100% increase in over the past 7 days. That is very, very good for us. So once again, that is all AMC. Let's check out GME's numbers. Relative to the first squeeze back in late January, early February, the numbers have come down, but they're still very, very high. Just because it's trending down doesn't mean that the short's not going to happen and it's over. We're looking at those numbers and the trend over like more of a shorter time frame. For example, GME has now gone from 16% a week ago to 24% as of Thursday, March 24th, 25th, whatever it is. Both AMC and GME are trending upward, and not only is the trend in our favor, but on top of that, the actual magnitude of these ratios and these percentages is absolutely massive. If we take a look at Tesla is notoriously one of the most shorted stocks in the stock market. There's a lot of people betting against it. It's clocking in just below 6%. A week ago, it was at 5.7. Most recently, it's at 5.81. GameStop's here at 24. AMC is here at 18. And Tesla's going flat, while AMC and GME are trending upward, as in more and more people are taking shorts. So if we get a nice little bullish follow through, if we get some nice price action in our favor, things are shaping up for a very nice squeeze on both of them. Right here, this data from prime brokers. We're not talking about data from hedge funds. We're talking about from prime brokers, which they're just not hedge funds. Like, this gives us a very good picture of what's going on. Is it a perfect picture? No, but it gives us a good estimation of the ballpark that we're in. And right now, the estimation, the magnitude for both is looking very good. And then the trend that we're seeing over the past week, over the past 2 weeks, is also very, very good. So overall, I just wanted to get those out. Personally, I bought Ortex. I'm using it. I am in the middle of discussing some sort of affiliation, just so anyone else is interested in getting Ortex. We're going to get a deal figured out for the Moon Gang, just so you know. But it's an awesome piece of software. Everything I heard on the phone call with them was great, and I'm excited to use this tool moving forward. And to wrap this part of it up, AMC, GME, trending in our direction. In terms of people taking shorts, the magnitude of them, phenomenal. The squeeze, the data is in front of us. Right? This, to me, is proof that the squeeze can still easily happen in a very violent manner for both of these stocks. Now, let's switch it up to a little bit of what's about to happen this upcoming week. So on the screen now is GameStop. GameStop's trading at 181. Over the past week, it's down 9%, but over the past month, it's still up 66%. I know it feels maybe over the little bit of the short term here that we're somehow losing, but keep in mind, over the past 1 month, we're still up 66%. Right now, GameStop is trading at 181, and let's go over to the 30-minute chart just to better see what's going on. So ever since March 12th, it was trading in a downward fashion. The bears were in control. We finally broke out of this trend line, and right now, we're at a very important technical level. When I'm talking about support and resistance, I just mean a price level that the stock has bounced off of or been rejected by. Support is bounced off of. Resistance is a price level we've been rejected by. In the world of stocks, technical levels are very important because if they're important in the past, they tend to be important in the future. For example, we have seen 185 multiple times for GameStop. It's been rejected by it. It's acted as support. It's just an important price level. And once again, that's exactly where we are. So for this upcoming week, I'll be watching that. Above it, we do have some resistance in the region of 200 to 212. If and hopefully when the bulls break above that, I'll then be watching 250. On the downside, we do have some support around 158, and below that, there's a lot of support in between 100 and 120. Those are the levels I'll be watching out of the gate when the market opens on Monday. Now let's quickly get those same levels for AMC. As you're gonna see, these charts look very, very similar, and that's just because retail traders and Wall Street, we're all trading these stocks pretty much similarly. Like it's that same battle between hedge funds and Wall Street and retail traders. So that's why they're gonna look so similar, is because a lot of the times in our mind, the whole group interested in these, we're thinking about them the same way. Anyway, AMC 1024 over the past week, it's down 26%. Over the past month, it's up 23%. Let's go over to this chart really quick. So a little same looking chart, a little bit more steep. So we had that sell off from 1450 all the way down to sub 9 on AMC. We finally broke out right here. The RSI was a bit overextended. RSI, relative strength index, it basically just maps out bearish versus bullish momentum. When it gets very high, that's a lot of bullish momentum. When it gets very low, that's a lot of bearish momentum. So basically, the bulls had a lot of control. It looked like they were just kind of overextending themselves, needed a break, and that's where we're at right now. AMC, the RSI is about neutral. We just bounced off of the support at $10 on the way back up. I'm looking for resistance at 11, then 11.85. I think the pressure personally will really get turned up on these hedge funds once AMC gets above 11.85, especially 12.91. I think that's an area where their downside, their risk tolerance is really going to come into question. From here, we do have support in the region from 10 to 974, and below that, the $9 level. Just so you know, in the stock market with technical levels, a lot of them seem to end up aligning with key psychological levels. People like to set their limits at nice levels, $10, $11, $15, like nice round levels. It's just kind of a human psychology thing. So those are the levels I'll be watching on both GameStop and AMC as soon as the market opens tomorrow, Monday, March 29th. But other than that, I feel very confident the numbers that we're seeing in Ortex show that the squeeze, whenever you're hearing news from like basically all of these Gregs out there saying that it's not, well, if anything, AMC is looking better than it ever has, and it's trending even more in our direction. It's gone from 8% up to 18%, while GameStop, maybe not the strongest numbers we've ever seen, but the numbers are at a magnitude so high that it's still very possible. Overall, obviously, these are my own opinions. I implore you to do your own due diligence. This is just the pieces of data and evidence that I've personally found. And remember, I am not a financial advisor. Also, as a quick reminder, don't forget to join up with the Moon Gang by hitting the subscribe button. I do update videos like this, and I also live stream Monday to Friday. So if you don't want to miss any of that, hit that subscribe button, go over to that bell icon, click it, and switch it to always so you get notified with any new pieces of content. And also, if you want this training platform for absolutely free, it's called Webull. You can sign up and you'll get one free stock. And then if you deposit $100 into your account, you'll get a second free stock. So in the world of the stock market, you're not going to hear free too often, but this is one of those scenarios where you're guaranteed at least a free $10. So in my own opinion, I think it's worthwhile to check out. And until I catch you next time, Moon Gang, best of luck in the markets.